The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Are you wondering if your kids or grandkids are ever going to be able to afford their first home? With us now is David Steinberg, a mortgage broker with a special interest in helping first-time home buyers get into the housing market. David, welcome to the show.
Thanks, Sybil.
So tell me a little bit about your background. How did you get into this mortgage brokerage business?
At first, I was an account manager for a major bank, and I decided that I didn't want to work for a bank anymore, so I went out on my own.
And how's that been for you?
It's been really good. Thanks.
What do you enjoy the most about what you do?
I really get a lot of reward knowing that I'm helping people achieve their home ownership dreams. So it's, it's really rewarding knowing that I'm instrumental in helping people get into their first home.
And that can be an exciting, scary, stressful time all at once.
Definitely.
I remember buying my first home. Interest rates were 10%.
Wow.
And I locked in for 5 years before they went up.
Oh.
They didn't go up.
Right.
Oops.
Yeah.
Oh, well, I bought my first home and it was a good feeling.
For sure.
But saving the down payment is tough. What are some of the struggles first-time home buyers are dealing with today?
Well, with our housing prices in Victoria, our clients or our buyers have to come up with a much larger down payment than would be normal.
Yes.
So it's a lot harder to save up, let's say, $30,000, $40,000, $50,000. The other challenge that a lot of folks are facing these days is the Canadian government has made qualifying for a mortgage a lot stricter, so incomes have to be a lot higher to qualify for those higher mortgage amounts.
So young people today, they're graduating, they're going out and finding a job, but their income levels just may not be high enough to save a down payment, first off.
Right.
And second of all, to even afford the payments. They may not be able to even get into the housing market.
Right.
But I understand you maybe have a creative solution for that.
Right, yeah. And what I focus on with a lot of people is making it more of a family affair and getting the parents or grandparents involved in helping their children get into the market. So,
what would that look like? I think that's a great idea. But is it, hey, mom and dad, give me some money?
It's not just that. A lot of parents also don't have the funds themselves to give their kids $50,000 or $100,000. So that's where I really step in and start offering the parents themselves some options to perhaps refinance their home to help their kids come up with the down payment. And then the kids will come up with some sort of repayment plan with their parents to eventually get that money back to them.
Oh, I like that idea a lot. I'm not a big fan of just giving money to kids.
Right.
Because it enables them maybe some bad behaviors. And it feels so good when you can do it on your own. So you're saying the parents can use the equity in their own home,
right,
tap into it, and then lend that money to their kids or grandkids, or they could give it away if
right,
they want to give it away.
Yeah.
I mean, you can't take it with you either, so that's a personal
right,
decision.
And a lot of parents are happy to just borrow the money themselves and then gift the money to their kids because, with the high housing prices these days, the mortgage payment is almost just enough for the kids to handle with their monthly budget.
Now, how about joint ownership? Do you see that happening very often where maybe the parent will co-own the property? So rather than just lending or giving them the money, they actually have a stake in the house?
We do, yes. A lot of parents will co-sign on the mortgage with their kids, yes, to help them also qualify for that mortgage. And then in 5 or 10 years down the road, when the kids can requalify on their own, the parents will come off the mortgage, and that'll be...
That's great. Well, I was 21 when I bought my first house at those crazy 10% rates. But my mom and dad did end up co-signing on the mortgage so that I could qualify for it.
Right.
And as soon as my income caught up to me enough so that I didn't need them, I had them removed because it was an independence thing for me. But I'm still grateful to this day that I had that support.
Right, right. And these days, a lot of parents are getting involved with their children and helping them get into their first homes because as we see housing prices just going up, it's just going to become harder and harder for younger people to get into homes.
And they're paying rent anyways, and I hate throwing money down the drain. So if their rent payment versus their mortgage payment are somewhat similar, the mortgage may be a little bit higher, but now it's for savings. They're building up equity in their future. They're creating wealth.
Right.
which is fantastic.
Right.
So is it better for people to go into their bank, go through a mortgage broker? What are some of the benefits of working with a mortgage broker?
Well, working with a mortgage broker gives that client a lot more options to choose their different lenders. It gives the client a lot of options to choose different interest rates or different terms and conditions that are offered on different kinds of mortgages.
So more selection.
There's more selection, and it's also a much more personalized kind of service. You know, mortgage brokers, we will answer your call on the weekend or in the evening if there's something urgent, whereas I don't know if a bank necessarily would.
Probably not.
So it's just a much more personalized service. I find that I think the service is a lot quicker and a smoother process for the client. And of course, there's more selection with regards to rates.
Because there's so many things to consider. Best rate isn't always the best. You want prepayment options.
Right.
You want, is it portability, transferability? All of these things to think about. You don't want to get locked in and have these crazy penalties if you sell the property down the road.
Exactly. And mortgage brokers really just focus on mortgages themselves, whereas if you see somebody at a bank, they might be focusing on a range of different products to sell that client. So I find that when we have clients come to us, they really appreciate the fact that we do just specialize in mortgages.
And how much of a down payment does a first-time home buyer need?
The minimum down payment requirement is 5% down on any home under $500,000.
Oh, they've capped it. Well, that doesn't go very far these days.
Right, and on any on any portion of the purchase price above $500,000,
yes,
10% is required on that.
Now, if you're only putting the minimum down, CMHC insurance fees come into play, don't they?
Right. Yes, CMHC is the Canada Mortgage Housing Corporation, and what they protect lenders against the borrowers defaulting. So in a way they're acting as a stabilizer for the housing market in Canada. But there are insurance premiums that are involved when somebody is putting less than 20% down payment on their home. That
was going to be my next question. So as long as you have 20% down, you don't have to pay that additional one-time insurance fee at time of purchase?
Right.
So
for 99% of buyers out there. Some lenders may still require a CMHC fee even if the client has 20% down, but those cases are very rare.
And would credit rating and things like that come into play?
Definitely. Credit rating is very important, and also the income that you have to qualify for the mortgage also plays into the situation.
And so home buyers, no matter what scenario this is under, you really need to do your research, shop around for the rate, find out if you qualify. And we've got a great guide for those of you out there wanting to know how to best prepare yourself for borrowing money. Contact us at thewealthylife.com and we'll send you a copy of the mortgage guide. David, thank you for being on the show today. It was great having you.
Thanks so much.
When we return, discover how much your financial advisor really gets paid.